Hey there, thanks for stopping by. Today, we're talking about something that could be an excellent addition to your financial toolbox, especially if you're looking for a secure way to make your money work for you without taking on unnecessary risks. Have you ever wondered where to park your savings so it's safe but still earns a little something extra? That's where money market funds come in. Here's something you might not know. Money market funds are often chosen by both everyday savers and large organizations because they're specifically designed to prioritize stability and liquidity while offering a modest return. They can give you more flexibility than locking up your money in a traditional CD and often better returns than a typical savings account. So, what is a money market fund? Think of it as a type of mutual fund that invests in highly reliable short-term debt. This means your money is being lent out to trusted borrowers, like the US government or large corporations, but only for a short time, usually a few weeks to a few months. In return, you earn interest on your investment. It's like putting your money in a savings account, but instead of the bank doing all the lending, a money market fund does it, and often at a slightly better rate. You might be wondering, how is this different from a regular savings account? That's a great question. The main difference is that while savings accounts are insured by the FDIC, money market funds are not. That said, they're managed to be extremely stable, aiming to maintain the value of each share at $1. This means you typically won't see fluctuations in the value of your investment, which makes them appealing for anyone who wants both safety and easy access to their money. Here's where it gets interesting. Money market funds work by pooling together money from many investors. The fund managers then use that money to buy high-quality, short-term securities like treasury bills, certificates of deposit, or commercial paper. These investments are chosen for their reliability and short time frames, which helps keep the fund stable. The returns come from the interest earned on these securities, and while they might not make you rich overnight, they can provide consistent, predictable growth over time. If you're thinking, why would I use a money market fund instead of just keeping my money in a savings account? It really depends on your goals. Money market funds typically offer higher yields than savings accounts, which can make a noticeable difference if you're saving for a short-term goal, like a vacation, a home down payment, or even an emergency fund. Plus, they're usually more flexible than CDs, which lock up your money for a set period. Now, let's talk about the types of money market funds you'll encounter. The first is government money market funds, which primarily invest in US government securities. These are the safest option and are great if your priority is minimizing risk. Then, there are prime money market funds, which invest in corporate debt and can offer slightly higher yields, though with a tiny bit more risk. Finally, there are tax-exempt money market funds, which focus on municipal securities and might be a good fit if you're in a higher tax bracket and want to reduce your tax burden. Getting started with a money market fund is easier than you might think. Most major financial institutions and investment platforms offer them, and you can usually open an account with a relatively small initial investment. Take some time to compare options, looking at factors like yield, fees, and the types of securities each fund invests in. Make sure to also check for any minimum investment requirements. The right choice depends on your individual needs, so it's worth doing a little homework. One thing to keep in mind is that while money market funds are very stable, they're not completely risk-free. For instance, during times of extreme market stress, there's a small chance a fund could break the buck, meaning its value could fall below $1 per share. While this is rare, it's a reminder to always be aware of the risks, even with low-risk investments. So, who should consider using a money market fund? They're a great option if you need a safe place to hold cash temporarily while earning a bit of interest. For example, if you're saving for a big purchase in the next few months, or you just want to keep some funds easily accessible for unexpected expenses, a money market fund could be a smart move. But if your goals are longer term, you might be better off exploring investments that offer higher growth potential, like index funds or ETFs. And there you have it, a practical and straightforward way to make your money work harder while keeping it safe. If you've got any questions or experiences with money market funds, let me know in the comments. I'd love to hear your thoughts.